Mr. Aidan Yao is Senior Emerging Asia Economist for AXA Investment Managers Asia Limited. What are the key macro developments in China?
I think with China, is the economic situation has really gone through three phases. So in the start of the year, we're seeing quite weak economic numbers, which caught the markets and policymakers by surprise. And then we're seeing targeted policy stimulus coming through from the authorities that help to revive economic growth and macro activities in the second quarter. And in response, we're seeing quite a vigorous rebound in economic growth. However, going into the third quarter, so starting from July, we're saying that again the economy is running into headwinds, and looking through the data from a top-down approach, that economic weakness has really been driven by the correction in the housing market. That is not only slowing the construction activities, but because the housing market is sitting on the center of an entire economic chain, it's affecting the upstream production of glass, cement, steels, and in the downstream, it's affecting retail sales of furniture, auto vehicle, and home appliances. So that's really what we see as the fundamental driver of the economic weakness that we are observing at the minute. And in response to that, we're seeing that in the recent weeks and months, the policymakers are starting to provide support to the housing market. Initially, we started with the easing of home purchase restriction policies. So vast majority of the cities that had those purchase restrictions on have either partially or completely removed those restrictions. Also, in the 2 weeks ago, we're seeing that the PBOC started to provide policy easing on mortgage lending for home borrowers. For mortgage borrowers, and we have seen some high-frequency data coming out of property developers suggesting that since the policy easing taking place, there has been some revival of housing turnovers, housing transaction activities in the market. So going forward, we think that these policy easings will help to mitigate the downside risk in the housing market, but not necessarily strong enough to reverse the overall correction trend in the market. In recent time, that we have seen the pace of structural reforms really picking up, and the government is rolling out reforms for the state-owned enterprises. It's reforming the local government financing system. It's reforming the hukou system, which helps to accelerate the urbanization process in China. And there's also rumors that the land reforms are going to be the central part of a discussion at the fourth plenum meeting later this month. So I think a lot of those medium-term hard macro reforms are being rolled out and being gradually implemented in the economy. I think that will have not only profound economic impact over the medium term, but already seen that financial market taking a forward-looking view on what these reforms will do to corporate earnings and corporate profitability and efficiency of companies. And that's why if you look at the Asia performance over the last months or so, compare that with the global equity market performance. Global equity is definitely in a sharp correction mode, whereas the Asia market is actually rallied around 8% in Shanghai and about 12% in Shenzhen since the start of September. So that's really suggesting that despite the near-term economic weakness, investors are taking a much longer-term view on the Chinese macroeconomic situation and pricing the equity markets according to those long-term positive views.